Wherever you are in the world, times have changed. And it's not just down to the COVID-19 pandemic.
Certainly, coronavirus has accelerated the move into an era of state-sponsored capitalism, where governments and central banks are stepping in to help economies in trouble. But this transition has been going on for decades.
Going forward, the world is recovering from the crisis at different speeds. Here in Europe, over in the United States, society is still deeply entrenched in the effects of the pandemic.
Here in Asia, economies are leading the way when it comes to recovery. China is no longer an emerging market. As it pushes ahead as an innovative nation, it's triggering competition across the globe, no more so than in the United States, where information technology-based industries were the big winners in 2020. And don't forget, we consider China as a core asset class in itself, one that all investors should be picking up on.
When it comes to equities, it's not just black and white. Long term, we still want to focus on growth and innovation, for example in healthcare and life sciences, the new data industry. But 2021 still offers plenty of opportunities in the value segment of the market too. One thing is for sure, cash is really expensive and there are many alternatives for your money. Even hedge funds or private equity investments are no longer the black boxes they used to be and can be considered for a diversified portfolio. Although manager and deal selection are key to a successful implementation.
But of course, 2021 isn't without its uncertainties. If we recover from the COVID-19 crisis too quickly, we could face inflation.
As we continue to work from home, cybersecurity is an increasing threat. Just imagine what a global internet and infrastructure outage would mean for your daily life.
And what if we all started taking real steps to protect our planet? That could change our economic landscape once again.
Whatever happens, cash is not king. Being invested is the key to success.